Manufacturing accounts. What are manufacturing businesses? Manufacturing businesses make the goods that they sell. They purchase raw materials in order to create their goods. What financial statements are prepared for manufacturing businesses? It includes a manufacturing account. This calculates total cost involved in making goods. An income statement. This calculates the profit or loss made on the goods sold. A statement of financial position. This is prepared in a similar way to other non-manufacturing businesses, which includes the assets, equity, and liabilities. Now let's see how to format a manufacturing account. The first section is the direct materials consumed, which includes opening inventory of raw materials, add purchases of raw materials, add carriage inwards of raw materials. This is the transport cost in order to bring your raw materials to your factory, less closing inventory of raw materials. Now you get the total of the cost of raw materials consumed. You add up direct expenses or royalties and direct wages in order to find the prime cost. Next, add up the overheads. These are all indirect expenses related to manufacturing, such as factory electricity, factory rent, supervisor wages, depreciation of machinery, factory insurance. There are many more. I've taken few examples in order to construct the manufacturing account. By adding up all these, you find the total overhead cost or the indirect expense. Now, add opening inventory of work in progress and less closing inventory of work in progress and find the net value of work in progress. Add up the prime cost, total overheads, and net work in progress in order to find the production cost. Prime cost, production cost, and total cost. As you can see here, the prime cost includes direct material, direct labor, and direct expenses. Production cost includes the indirect manufacturing cost or production overhead. This total is transferred to trading account later. And then the total cost further adds the administrative expense, selling and distribution expense, and financial charges. By adding direct material, direct labor, direct expense, we can derive the prime cost, whereas adding up the indirect manufacturing cost and the work in progress, we can calculate the production cost. By taking the total administrative, selling and distribution, and financial charges, we can take the total cost. This is how you calculate the total cost, by adding up prime cost, production cost, and administrative, selling and distribution, and financial charges. Types of inventory: raw materials, work in progress, finished goods. Raw materials are the goods purchased by the business for manufacturing purpose. This includes opening inventory of raw materials and closing inventory of raw materials. This also reflects in a manufacturing account. Work in progress are the items or goods that the business has not yet completed. This includes opening inventory of work in progress, closing inventory of work in progress. This also will be transferred to manufacturing accounts. Finished goods. These are goods which are ready for sale. This includes opening inventory of finished goods and closing inventory of finished goods. This should be transferred to income statement. A manufacturing account is a financial statement that is used by manufacturing businesses to calculate cost of production of goods over a specific period. This is a sample of a manufacturing account, and you can see the first section, the raw materials consumed, raw materials required for manufacturing a product. Primed cost, add up direct labor and direct expenses. So prime total cost, it has direct expenses such as expenses that can be identified to each unit of production, for example the hire of a special machine. A manufacturing account is a financial statement that is used by manufacturing businesses in order to calculate the cost of production of goods over a specific period of time. This is a sample of a manufacturing account. The first section is to find the raw materials consumed, which is also called direct materials. Raw materials required for the manufacture of a product. Direct expenses. These are expenses that can be identified to each unit of production, for example, the hire of a special machine or royalties. Direct labor. Wages of the machine operators who make the product, as they are directly involved in producing the products. Indirect costs. The costs that indirectly involved in production. Work in progress. Items or goods that the business has not yet completed. Now, we know what are the key variables in order to prepare a manufacturing account. This is a past paper question in Edexcel 2023 October. Yola, a manufacturer, provided the following information for the year ended 31st March 2023. Inventory, all the three types of inventory as we discussed in one of the slides. Raw materials, 1st April 2022 would be the opening balance of raw materials. Work in progress 12,340, finished goods 20,100. 31st March 23 should be the closing inventory of raw materials, work in progress and finished goods. Carriage inwards, carriage outwards, electricity, factory rent paid, insurance, other payables, factory supervisor, other receivables, factory rent, production of machinery, cost, provision for depreciation, purchase of raw materials, revenue, royalties, wages paid for production, for factory supervisor and administration. Production machinery is depreciated at 20% per annum using reducing balance method. A full year's depreciation is provided for the year of purchase. Electricity and insurance are apportioned 70% to the factory and 30% to administrative. You are required to prepare an income statement for the year ended 31st March 2023 for 9 marks. Second, manufacturing account for the year ended 31st March 2023, 11 marks. As you can see here, now you should be able to understand the format of a manufacturing account. Now let's see how exactly it will reflect in the manufacturing account based on the question provided over here. As you can see here, opening inventory of raw materials should be 12,980. Purchases of raw materials 186,500. Carriage inwards 1,610. Closing inventory of raw materials 19,170. Royalties 12,000. Direct wages 95,600 because it's clearly stated there wages paid for production. Factory electricity 15,000, and you can see there is a working for that as well. 70% should be transferred to manufacturing account. Factory rent 69,800, no adjustments. Supervisor wages 350. Electricity, as you can see here, 70% should be transferred, 8,000 into 70%. Depreciation of machinery, you take 206,500 minus 81,000. Calculate 20% should be transferred to depreciation machinery. Opening work in progress 12,340. Closing work in progress 11,170. Now you exactly know where to transfer the information to a manufacturing account. Take few minutes to complete the manufacturing account. Now let's see how to complete the income statement. As you know, this is the format of an income statement: revenue, take away sales returns, find net revenue, then cost of sales, opening inventory of finished goods, add production cost which you transfer from the manufacturing account, less closing inventory of finished goods, then you find the cost of sales, then from net revenue deduct cost of sales in order to find gross profit. If any other income, add it up, less expenses. Carriage outwards, office electricity, office insurance, office wages are some of the examples. Deduct this from the gross profit in order to find the profit for the year. Now let's relate this to the question. As you can see here, revenue is 827,500. There isn't any sales returns. Opening inventory of finished goods 20,100. Closing inventory of finished goods 37,800. Production cost you transferred from the manufacturing account closing balance. Carriage inwards 2,390. Office electricity 15,000 into 30%. Insurance, again 30% of insurance should be transferred there. Office wages, as you can see here, administrative 21,500. Now we should be ready to prepare the income statement. Take few minutes and we can check the answers.